Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. You can post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is @Pless. For those of you who've seen my webinars before, please bear with me. I want to make sure everyone understands my approach to trading. So here are the key tenets to my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures. That certainly applies to large cap tech stocks like the Magnificent Seven stocks, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of the trades and they hedge their dealt exposure with the ES futures. If the Nasdaq 100, NDX is the underlying index, QQQ is the ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of the trades and they hedge their dealt exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market to develop a thesis for the day regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm a thesis and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset, as well as the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat in YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Yeah, this is going to be, it's been a fascinating weekend, fascinating day, and hopefully I can add some insight to that. Here's my agenda for today, Monday, March 23rd. First of all, I want to go over news items, economic data, events for this past weekend, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today. Then I'll take a look at the live market. And when I get to live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items. So there are a couple of minor data releases coming up this week. So let's take a look at the ES futures and Bookmap. So there are a couple of minor data releases. I don't think there are any high impact data releases. So Tuesday, tomorrow, S&P Global PMI data comes out at 9:45 a.m. And then on Friday, 10 a.m., Michigan Consumer Sentiment. All right, so again, this is the ES futures. What I want to do, I'm going to take a look at a chart of SPY. So on This is Thinkorswim. Charles Schwab. SPY trades, and a lot of stocks trade 24/5. So this is Friday afternoon. And a lot of this move happened after the futures closed at 5 p.m. SPY continued to trade. All right, so let's take a look at the, let me zoom out on, oops. I'm going to zoom out just a little bit. Let me bring up something. So let's follow the sequence of events starting last Friday. And this is from President Trump's social media site, Truth Social. So this came out on Friday afternoon after 5 p.m. So futures were closed. SPY continues to rally. All right, so that was the first post. So that was Friday afternoon. Stocks did rally after that. All right, so next post. This came out on Saturday, 7:44 p.m. And Trump changes his tone, threatening power plants, Iran's power plants, if they don't open the Strait of Hormuz. So based on that, this is yesterday evening. Futures drop down. SPY drops down. So it was looking like a bearish open today. And then the third post. Now this is very strange. I think there's something strange going on. Trump talking about talks with Iran. So again, changing his tone. And this is the reaction in SPY. This is about a 21 point move in 1 minute. So that's a 1 minute chart, 1 minute candlestick, and this huge rally, and then grinding down since that move higher this morning. And by the way, the Iran Foreign Ministry has denied there are any talks going on. So this is all very strange, and I'll just leave it at that. So that's what's been driving the market. That's the important news. What's going on with Iran and oil prices. All right, so that's SPY. And I'm showing the SPY chart so we can show the reactions to all of these posts. All right, so again, that's what's been driving the market. All right, so we'll get back to this chart in a few minutes. All right, so let's go back to ES now. So this is the ES futures of Bookmap. This is a reaction. Up from around 6,500 to almost 6,750. Huge move, very short time period. All right, let's take a look at levels on this chart now. All right, note the dashed blue line here. That is the ES lower daily expected move. And that was the launching point for a long if you were very fast, if you were maybe already in it. So that was around the low of the day. So this is going back to the opening yesterday evening. Lower daily expected move for ES. Acting as support, launching point for a long. You can't see the dashed blue line here. It's overlapped by another line, but that is the upper daily expected move right there. And then ES ends up at the upper weekly expected move. So expected moves, definitely in play for today. We'll see more of that today. From the lower daily expected move up to the upper weekly expected move, and that was the high of the day. All right, so those are the most important levels. And note, down below, this is the SPX 6400 put wall, and then let's see, where is it? I think this is the SPY 640 put wall. Or no, I think that's actually down below. Let's see. No, here's the SPX 6400 put wall and the SPY 640 put wall. So those levels were not tested. And note both those levels moved down from Friday. All right, so those are the key levels in play, mostly expected moves. All right, before I spend more time on this chart, let's step back. Let's take a look at our higher time frame. I'm going to go to the S&P 500. This is the SPX, underlying index, 1 day, 1 year chart, and Thinkorswim. So we see the April 25 rally ended up in consolidation this year, 2026, and then a rollover starting around February expiration. And note, on Friday, SPX did trade down below the 1120, November 20th low, but now has recovered somewhat. All right, so let's take a look now at a shorter time frame. Let's go to a 30-day, 1 hour chart so we can get a closer look at the most recent price action. All right, there's that low on Friday that undercut the November 20th low. Gap up today, up above the SPX, upper daily expected move. And note SPX did not quite make it up to its upper weekly expected move. And note I do post the expected moves. Well, I do calculate the expected moves for ES, SPX independently as well as NQ. And I post those levels every day in the Options-Doug chat channel in Discord. And I note I posted those levels yesterday afternoon at 3:15. All right, so SPX looks like it's trading just above its upper daily expected move. Also, this is the current trend, linear regression channel, still showing a downtrend. Looks like SPX gapped up to around the middle of that. All right, let's take a look at levels on this chart. Let's start with the expected moves. This is based on the options market, based on the closing price for SPX from Friday. So we'll start with the upper weekly expected move shown by the dashed purple lines. Again, based on the options market, based on the closing price for SPX from Friday. SPX did not quite reach its upper weekly expected move like ES, which closes at a different time on Friday afternoon. And then the dashed blue lines showing the lower and upper daily expected move, also based on the options market, based on the closing price again for SPX from Friday. And looks like SPX did trade up above that level today and now is trading right around that level. Or let's take a look at Spotgamma levels on this chart. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. I'm going to point out the key daily levels. First of all, the put wall has moved down to 6,400. That's a strike with large net negative gamma that can be expected to act as support. And note that level has moved down let's see, from a week ago, well, it was 6,500 a week ago, has moved up to 6,600 and now down to 6,400. So that's a put wall. Next level up above is the volatility trigger, well up above is 6,800. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, market makers position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility. Absolute gamma strike remains at 7,000. That's a strike with large absolute positive and negative gamma. That's where most of the gamma-weighted open interest is concentrated. And then finally, the call wall remains at 7,100. That's a strike with largest net positive gamma that can be expected to act as resistance. And note the volatility trigger is based on Spotgamma's older total open interest model. We'll take a look at a view of gamma based on their newer synthetic open interest model in just a couple of minutes. All right, so shifts and levels. Again, put wall shifted lower. All right, so let's wrap up our view of SPX with a 1 minute chart. So this is data beginning last Tuesday, showing the downtrend that began last Tuesday and then low of the day on Friday before the end of day rally right around 64.73. Gap up today. And now SPX is traded up and down around its upper daily expected move. All right, back to our SPY chart. Here's the SPY put wall. Way down at 640. That level also moved lower compared with Friday. Note in this move up, SPY traded up above its volatility trigger up to this 667.0 gamma level. All right, that's SPY. So the move was over in about 1 minute this morning, and then chop and a gradual move down. And SPY is also trading well down below its volatility trigger, although it did move up earlier today. All right, back to Bookmap. Again, I pointed out the key daily levels. There's the SPY volatility trigger. And again, the expected moves. And we'll talk about the setups in just a couple minutes. All right, for SPY, volatility trigger, call wall shifted higher, and the put wall and absolute gamma strike shifted lower. All right, let's take a look at Nasdaq. All right, Nasdaq, lower daily expected move. NQ futures, also in play. And NQ did trade up above its upper daily expected move, just like ES, but not quite make it to its upper weekly expected move. All right, that's NQ. And now trading back down below its lower daily expected move. So let's take a look at the underlying index components. So let's start with QQQ. See if there are any levels in play. All right, QQQ again. Over a 20-point move higher. Around 21 point move higher in 1 minute. Retest of this 595 round number level, double top there, and now moving lower. All right, for QQQ, note 590 is the absolute gamma strike, 570 is the put wall, so QQQ did not move down all the way to its put wall overnight. And by the way, for QQQ, the put wall and absolute gamma strike shifted lower, call wall shifted higher. All right, let's take a look at NDX. other underlying index component. NDX gapped up. Interesting. And found support earlier today right at this 24,100 level, which is the call wall and absolute gamma strike. So key level for NDX, providing double bottom support there. All right, for NDX, volatility trigger, call wall, and absolute gamma strike all move lower, so that's a bearish hat trick for NDX. And there's that 24,100 level. I know there are a lot of lines on this chart. That's quite a bit of movement. So I do have the NQ round number levels on this chart. Probably should have just turned those off and left on just the left on the spot gamma levels and the expected moves. All right, we'll talk about setups in just a couple of minutes. Let's wrap up our positional analysis by taking a look at gamma. So we look at gamma to get a sense of the expected volatility for the day and also potential targets with these GEX bars here. All right, so this is market maker's position, gamma position in SPX. Red shading shows negative gamma. Remember, in negative gamma, we're looking for higher volatility. And blue shading shows positive gamma. And in positive gamma, we're looking for lower volatility as market makers trade against price to hedge their delta exposure. So this is showing almost all red, negative gamma. Let's step back in time a little bit. So the levels that we just took a look at are based on open interest. They're updated once a day. This data is updated every 10 minutes. So let's take a look at SPX 10 minutes after the open, step through time. And we're focusing on these gamma bars over on the left. So what this is showing is traders are selling calls. Market makers take the opposite side, they buy calls. So the 66.75 level, key level, traders selling calls. Note that GEX bar expands as price moves up. Gamma's greatest at expiration at the money. Now as price starts to move lower, gamma disappears and appears down below as traders sell puts right at 65.50. So here's the current picture of gamma. And the purple line here, the candlesticks are SPX. Purple line is the hero signal. All right, so let's move on now to execution. Let's move on to real time. Let's see what options traders are doing today. All right, so I'm going to start with the S&P 500 and start again by looking at what options traders have been doing today. All right, so this is the S&P 500 hero signal for the index components. That is SPX and SPY. We've already taken a look at those. It also includes options trades and market maker hedging activity for ES and XSP. The white line is price, and the purple line is the hero signal. And a rising purple line indicates traders are buying calls and selling puts, taking positive delta positions. And a falling purple line indicates traders are taking negative delta options positions. They are buying puts and or selling calls. So we have another, or there is another level similar to expected move here in play. This is Spotgamma's proprietary implied one-day move high. And this is based on the opening price for SPX. And note how that level acted as resistance today. So traders could not make it up above that level. So that was a key level after the open again for SPX. And that was a good entry point for a short, by the way. Whether you want to sell futures or sell a call spread, buy a put spread, SPX or SPY. So let's zoom in on this. All right, so remember the most of the move happened right at 7 a.m., just after 7 a.m. And then there was a bullish opening drive after the open. I'm going to separate out puts and calls. So this is showing in the index, rising orange line, traders buying calls, rising blue line, traders selling puts. Take the foot off the gas. Let's go back to let's take a look at the equity signal. We'll get back to that in just a minute. All right, so traders buying calls, selling puts. That reverses as price reaches that implied one-day move high. Traders start selling puts again high at that implied one-day move high. So far, that was the high of the day. Let's take a look at the equity signal. So this is showing options trades and market maker hedging activity for the 500 stocks in the S&P 500 index. And this is showing traders buying calls. That's shown by the rising orange line. Traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. So the white line is price for SPX again. And again, the orange line is calls, blue line puts. So net for the day, traders are buying calls and buying puts. Call buyers were in charge up until about 11:15 or so. Call buyers took their foot off the gas, started buying puts more aggressively, and the S&P 500 turned lower. So you typically want to look at both of these signals. There's that second move lower, again a peak in the put pattern there. So traders buying puts, selling calls. All right, so let's go take a look at Bookmap now. And I'm going to zoom in. From about 9 a.m. to 12. So we'll have to adjust this again. Adjust this view to get the full range. All right, so here's that bullish opening drive. And note the participation by large traders with iceberg orders. Large traders use iceberg orders to hide their size. Also look at the numbers here. That is very large number of iceberg orders. Traders buying the move, large traders. So in the subchart here, I have the blue line, light blue line showing iceberg orders, yellow line showing stops, and then the magenta line is showing cumulative volume delta. So we know traders were buying calls and selling puts in the S&P 500 index options. They were also buying calls in the S&P 500 equities, and then also large traders fueling those move higher with iceberg orders. These are, again, large traders using iceberg orders. Note in the subchart here, these axes are not aligned, so it looks like the numbers may be similar. So let's take a look at the subchart indicator here, and let's align the axes in the subchart. Well, let me zoom out. Well, I'll show that later. Let me zoom out, and it'll look a little bit different. So anyway, the point is that large traders buying with iceberg orders. much larger than the stop orders. All right, so again, we know traders were taking positive delta positions. So there's that first top. And this is the Spotgamma implied one-day move high I have on the subchart here, on this chart. And by the way, there's a difference in price between ES and SPX. And today that offset is right around 52 points. So that's what I'm using. So I'm showing SPX 6600 at ES 6652. And I do post the index relationships that I use every day in Discord. All right, so bullish opening drive. One way to play this, another way to play this is to go short at this one-day move high, looking at the peaks in the hero signals. All right, so here's this. Let me zoom just a little bit here. Get this view adjusted. Bullish opening drive. First short, second short, both at the Spotgamma implied one-day move high. This one worked a lot better. Down to this combo 3 level. That's a SPY combo 3 level. Let's try aligning the axes again on the subchart. Yeah, that's still not looking right. Looked a little bit different earlier today. All right, well, we'll forget that. All right, that's the SP 500. Again, bullish opening drive, then short setup, better right after 11 a.m. Let's take a look at Nasdaq. And Jalil, welcome, glad you're here. Looks like Stephen is going to answer your questions. So you need to go to Bookmap Discord, join, then verify your account. So you'll need a Bookmap subscription, and I believe you can use a free subscription. That's a digital only. So that's how you get in the in Bookmap Discord. All right, NQ futures and Bookmap. Zoom in again. So again, the big move happened 7 a.m. A little bit of a bullish opening drive after the open double top. Let's see what options traders are doing. All right, so here's the S&P 500 index, equities. So index again, buying calls, selling puts. Equities, buying calls. Nasdaq index, showing options trades and market maker hedging activity. For the Nasdaq index components, we've already taken a look at those, QQQ and NDX. So same thing, traders buying calls, selling puts, pretty choppy signal. Mag 7, as expected, traders buying calls. So the S&P 500 equities is really just the Mag 7 plus 493. Call buyers take the foot off the gas. Nasdaq starts to move lower as they continue to buy puts. Stop buying puts. Nasdaq now consolidating. So this is showing options trades and market maker hedging activity for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. We'll take a look at several of those stocks in just a minute. All right, so Nasdaq traded up above its upper day expected move, making a double top, and then starting to roll over as, again, traders take negative delta positions in the index and stop buying calls, continue to buy puts in the Mag 7 stocks. All right, so that's Nasdaq. I thought, for me, ES was a little bit more clear with this clear resistance level at the Spotgamma implied one-day move high. All right, any questions about the indexes? Let's take a look at some stocks then. So really the theme of the day has been mostly big move up, 7 a.m., and then a lack of follow-through for many stocks. I'm going to point out a few stocks that have had some follow-through after the open. So first is Amazon. 7 a.m. move. Bullish opening print, large green volume dot. And absorption at the 213 level. And now consolidating. So let's see what options traders are doing in Amazon. So for today, earlier today, let's zoom in on this. Traders are buying calls and selling puts. Note the 210 key gamma strike. Support that level, good entry point for long as traders buy calls, sell puts, mostly call buyers in the morning. Back to Bookmap, let's zoom in on this. Not a lot of range. There's the 210 key gamma strike. Again, good entry point for long. Double top. Now consolidation around 211. Right back to Hero. All right, so net for the day, traders are put buyers and call buyers. Looks like now the put buyers are dominating. Much larger delta notional. All right, next stock, Meta. Strong move of the morning. Remember the Mag 7 hero signal that we looked at. This should look similar. Bullish opening drive up until about 11:30. Call buyers take the foot off the gas and Meta turns down lower. Key for the day, support at the 600 level. Hedge wall, key gamma strike. Full alert comes in just after the open. Get your attention, indicating significant options activity. Again, traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. So that was nice follow through after the open. Up until about 11:30, then the call buyers took the foot off the gas. Traders started buying a few puts. And Meta turned over as the fuel that had driven price higher was gone. Let's go take a look at Bookmap. All right, Meta, remember support. 600 hedge wall, key gamma strike. Good entry point for long. Deep pullbacks. Secondary entries. High liquidity targets up above. The heat map of Bookmap shows a history of limit orders in the order book. And you can see the orders stacking up at the round numbers. 606, 607, 8, 9, and 10. Looks like the orders up to 608 were consumed, and then absorption at the 609 level as the call buyers took the foot off the gas. All right, so that's Meta. Nice bullish opening drive, deep pullbacks. All right, next stock, Tesla. Another strong bullish opening drive. So the pre-market move down below 360. Now Tesla has traded up to 385. Looks like that was the high of the day. Let's zoom in just a bit. See what options traders have been doing. Note all the green volume dots, aggressive buyers. Up to 385, high liquidity target. Looks like those limit sell orders at 385 were consumed. And now Tesla's rolled over down around 380. Let's see what options traders have been doing. Go to Tesla. Call buyers, put sellers at the open. Again, bullish opening drive. 380 hedge wall. Note how this move slows down. As the call buyers take the foot off the gas and put sellers become put buyers. Tesla grinds higher up until about 1110, then starts to move lower. So bullish opening drive. Main part of it to about 950. Then a continuation up till about 1115, 1110. So there was the first leg higher, very strong, fast, bullish opening drive. A little bit of consolidation. Move higher to 385. It looks like that is it for the day. Sorry about pronunciation. You're welcome, and thank you. And welcome, glad you're here. All right, so that's Tesla. Bullish opening drive up to 385. Then options exhaustion. All right, next stock. Let's take a look at Broadcom. So there was a little bit of follow through after the open in Broadcom as well. And just like other stocks, rolling over now. Let's see what options traders are doing. Go to Broadcom. Call buyers driving price higher. So this is a pure call driven bullish opening drive. Full alert comes in just after the open. Get your attention. Traders buy calls, market makers sell the calls. They have to buy stock to hedge their adult exposure. Bullish opening drive lasts until about 10:25. Call buyers take the foot off the gas. Fuel that had driven price higher is gone. Some sellers come in, and Broadcom consolidates. So mostly green volume dots here, a lot of aggressive buyers. And high liquidity targets, limit sell orders in the order book at the round number levels, usually higher at the zeros and the fives. Looks like buyers were exhausted here. Trend break and a move lower. Lower high. Back down to 320. High liquidity target down below. As the call buyers have taken their foot off the gas. All right, next stock, Palantir. Oh, Palantir, strong today. This is about the best bullish setup. Trading back up to the 160 call wall. So let's see what options traders have been doing. Let's go to Palantir. Now, the stocks that I follow, this is about the strongest of the day. So another call-driven bullish opening drive. Rising orange line, traders buying calls, market makers sell the calls, buying stock to hedge their adult exposure. Full alert comes in just after the open, signals significant options activity, clear target at the 160 call wall, high liquidity. Bullish opening drive lasted about 45 minutes. Deeper pullbacks for longs, long entries. Up to the clear target, 160 call wall, high liquidity again. Call buyers take the foot off the gas. Palantir consolidates for a while. Looks like some call buyers have come in. They may be chasing price. All right, back to Bookmap. Here's the initial bullish opening drive. 9:30 to around 10:15, 10:20. Clear target, 160. Looks like those limit sell orders in the order book were consumed. They came right back again. More sellers at 160, again consumed just a minute or two ago. All right, aggressive stock buyers as well as call buyers driving Palantir higher today. All right, last thing I want to take a look at, actually two more. Let's take a look at Micron. So Micron actually on the bearish side. So we've taken a look at several bullish setups. Now we'll take a look at a couple of bearish setups. So the first is Micron. Again, moved higher with everything else, 7 a.m. Bullish opening print, traded up to 430. 430 key level, that is the hedge wall. Resistance at that level, setting up a nice short. As maybe traders sell their Micron shares to buy some other instruments that have been beaten up lately. So that's Micron. Very nice short setup. Resistance at the 430 hedge wall. Key liquidity targets down below, especially 400. So if Micron continues to move lower, 400 is a very clear target. High liquidity at that level. So let's see what options traders have been doing. We'll go to Micron. Let's zoom in on this. All right, first of all, here's the level that you expect to act as resistance, the 430 hedge wall. The hedge wall can often act as support or resistance. So I always look at the hedge wall, or most Spotgamma levels, as resistance when tested from below or support when tested from above. And this definitely acted as resistance when tested from below. Call line up until that point, a little bit choppy, up until about 9:45. Aggressive call buyers come in, and this is a beautiful call peak reversal pattern. This is a very reliable bearish reversal pattern. Happens right at a level that you expect it to act as resistance. Call peak pattern. Traders buying calls up to that level, quickly turn around, start selling calls, and Micron versus lower at a level, again, you expect it to act as resistance. There's that reversal at 430 hedge wall. Deep pullback. Right at 10, just before 10:30 there. And then clear target down below, especially the 400 level. There's a limit buy orders in the order book, and they can act as a target for price. Let's go back and take a look at Hero. All right, so if the Hero signals had continued to move lower, had continued down like this, you would certainly expect that 400 liquidity to be tested. But right now, the call buyers have taken the foot off the gas. Then some large call buyers, that's an institutional order, large block order, call buyers have come in. So overall, though, basically the call line and the put line are flat for the day, indicating unless something happens later on this afternoon, the move is over. All right, so that's Micron. Finally, let's check oil, crude oil. Let's go to USO. Let's zoom in. So we'll take a look at USO and Bookmap in just a moment, and we'll see before the cash open that 7 a.m. move was down in USO. So as traders bought stocks, they sold oil. And then the continuation after the open, traders selling calls, buying puts, down to the 110 hedge wall. That level was tested a couple times. Then USO broke lower just after 11 a.m., now trading up above that level. So key move was the bearish opening drive down to the 110 hedge wall. So let's go take a look at Bookmap. There's the 7 a.m. move down with the news. So again, a good bit of the move lower took place before the cash open. And then here's the cash open right here. There's the move down to the 110 level that had already acted as resistance. I'm sorry, support. So 110 is acting as support. USO finally breaks down below that level, and then reverses higher, and now trading back down below that level. So there's the bearish opening drive, then the second leg lower. All right, back to Hero. All right, so again, 110 hedge wall on play. I'm going to shift the total signal. Let's go back and take a look at the indexes. Let's go back to the S&P 500. So ES, SPX consolidating now. Somewhere in between the two expected moves, the low and the high. Check equities. Same thing. Go to Bookmap, ES. All right, so ES trading right around SPX 6600. Does anyone have any questions? Anyone have any stocks you want me to take a look at? Let's check Nasdaq. All right, Nasdaq pretty quiet as well. Back to ES. Chopping right around 6,600. Let's go check Trace. Go to Trace. All right, so again, SPX, right in the middle between the Spotgamma implied one-day move low and high. Note right now, this is the strongest positive gamma, right at 6,600. All right, back to Hero. Hero choppy, but not making much progress. Since about 130 really, 135. It is moving higher now. Check equities. Also still grinding higher. So large traders have continued to buy this move with iceberg orders. Cumulative volume delta is negative for the day, and stops are about flat. This light blue line here is VWAP, acting as support, resistance, resistance, now support. Yes, is trading up above VWAP right now. All right, again, does anyone have any stocks they want me to take a look at? All right, back to Hero. Trace. All right, so this is showing the Hero signal still moving up. That's the purple line. Let's check one thing at Thinkorswim. So these are the Hero stocks that I follow. So this is not all of the Hero stocks, but most of them, the ones that I'm even remotely interested in. Interesting, and this is I've ranked by percentage change from the open. SMCI down substantially last week as I think one of the founders, co-founders, and employees have been found smuggling or trying to smuggle NVIDIA chips into China. I don't know the full details on that. There must be more news. SMCI at the top of the list. Let's check the S&P 500. Showing stocks on the move today. So this is the S&P 500 heat map. Interesting. Micron, one of the weakest stocks today. So the memory and storage stocks, Micron, there's SanDisk, Western Digital, Seagate, all weak, notably weak for the day. Strong stocks. Again, Palantir, we covered. Amazon and Tesla. All right, last call, questions, comments, stock. ES stuck right at 6,600, SPX 6,600. All right, everyone, I want to thank you very much for watching. So today I went over the sequence of events that began last Friday that have been driving the markets today. The Trump's post in social media driving the market, and then the questionable, I think, post today. And it looks like the market initially accepted it, maybe still accepting, but there's some skepticism, and I think rightly so. All right, so if there are any developments, I'll post in Discord, and then we'll go over any new developments on Wednesday. So everyone, thank you very much for watching. Thanks for your questions and comments. Have a great afternoon, and I will see you on Wednesday. Thanks again. Bye.